Hi there, Andrew Florian here from the Florian Realty team, and I wanted to talk to you guys about the mortgage interest rates. It's the big subject of the day, and there's so many different perspectives going on out there. And I know for us, we've just been trying to absorb as much as we can, and especially this fall, since the dust has settled a little bit, we've been attending a lot of conferences and seminars as a team, trying to make sure that we're really in touch with what's actually happening so we can get in better touch with our clients' needs and make sure that we're serving everyone according to what they are actually looking for and need out there. So obviously, we were in a situation where over the last couple of years, we saw home prices increase incredibly because interest rates just went so low. And here we are in a situation where, home prices are up here, interest rates are down here. And so your monthly mortgage payments are somewhere in between, depending on your mortgage approval rate. And more recently now, with the different interest rate hikes going on, we've seen interest rates go up to here and then prices come down to here. And again, depending on your situation and what your approval rate is and your affordability is, we are seeing that in some cases, the monthly payment that you would actually be making is actually quite similar to what you would have been making on the higher priced home and the lower interest rate. Now, that's not always the case, and you do have to crunch the numbers. And we always recommend strongly that you work with a mortgage broker that you trust. And we have several wonderful mortgage brokers on our team if you need to speak to somebody directly about your needs. But what's interesting to me is that as things unfold and as the news keeps giving different headlines and fear mongering versus like, no, everything will be fine. Oh no, we're going to crash further. Even with all that in mind and all the generic numbers that people tend to put out there, I think what's really important is that, and we've always said this from day one, is that generic numbers out there as a whole don't work. You need to know what price point you're looking in and what your personal situation is to know whether or not it's a right time for you or not to move. And something that's really also critical is, for example, like if we were to see any home under $1 million as a freehold home, meaning a semi or a town, or a detached home in Burlington, Milton, Halton, Oakville. If you can get anything for under $1 million in these areas right now, that's a freehold, then our recommendation is to jump on board if that's your affordability and that is your dream. Because what we're noticing is that the stuff that's coming under $1 million is not going much further down, and some are still even going in multiples depending on the area, the range, the age, etc. So that's one thing to consider. And then if you're looking to upsize, then this might be actually a great opportunity for you because you're looking at a lower margin to jump up. Whereas before we had people trying to get from smaller homes into larger homes, and the difference in value was $400,000 to $600,000 to jump up into a larger home. And now that margin has decreased because everything's percentage based, everything's kind of come down a certain amount. But keep in mind too that your land transfer tax is now going to be lower, and all the extra fees that are percentage based are also coming down lower as a result of that. So I think that's a really important thing to consider depending on your motivation. So if you're looking to get into your first home, we've covered that. Anything under freehold right now, it's an opportunity to jump in. And some of the condos are coming down a little bit, but some of the condominiums out there have really held their price. And they'll have higher condo fees, but still a great opportunity to get in, of course. And then the third option that we're considering for people is if you're looking to invest right now, because obviously you want to see what people keep talking about interest rates, but really it's about cash flow and what's actually coming in from the property. So that is definitely something we recommend talking to a mortgage broker about, and definitely something that we always would recommend crunching the numbers on, because for us it's all about whether or not you're actually bringing in cash, or in some cases, some people say, depending on the area and where they're investing, some people say they're happy to just break even on a property so that they can hold it and somebody else pays the mortgage while they see an increase in value on the property, which is likely to happen. A comment that I've heard made several times now in different scenarios, a mortgage broker said it to me, a realtor coach mentioned it the other day, and I thought it was such a brilliant way of looking at it, which was you marry the house, you date the mortgage. So anything right now in terms of mortgage rates is temporary. And it just means for us that if you're looking at a lower price point, and especially, for example, an investment, and you know that you can afford a certain amount a month, if you can afford it at these high interest rates for these price points, then as interest rates level off, hopefully down the road, because this is not going to be a permanent situation where interest rates hold on so high, as long as you put yourself in a safe spot, you should be able to purchase something right now, hold on to it, and in a couple of years potentially be really winning at this and really ahead of the game, further ahead than you thought. And if things do unfold as we do believe they will, and as the stories all seem to say, with the housing crisis that is looming and all the talk about 400,000 immigrants a year coming into Canada, creating a larger need for housing, um, especially in South Ontario, then that is only going to expedite the fact that really house prices are going to continue to go up, and we need to look forward. So instead of curling up in a ball and being scared and saying the sky is falling, I strongly suggest that if you've been considering what you want to do in real estate, it may not be the time for you. But it's never a waste of our time to have a discussion with you and to go through your options and to even set you up a search and have those talks and maybe ask you enough questions that over the next 6 months you have some things to absorb and to learn for yourself and discover a comfort level for whatever it is that you want to do. I have so much more to say on all of these subjects, of course, and every situation is unique. So I would recommend that if you do have any questions about this or any thoughts, shoot me an email at andrea@flooringrealtyteam.ca, or reach out to our team. You can always, if you have a question for Laura or anybody on our team, you can certainly reach out to them as well directly, or just give me a shout at 289-218-8119, or just put a post on our Facebook page and I'll direct it to whoever you want to speak with. But ultimately, all these generic numbers that you're seeing out there versus what's happening in different spectrums, different areas, and different types of housing and price points can be very different and unique. And your situation may also be very different and unique. So give us a call today and we'll give you a hand with that. But in the meantime, remember this: you marry the house, you only date the mortgage rate. So keep an eye on that and definitely get in touch if you have any questions. Have a great day.